All right. So thank you all for joining this webinar. Just as an FYI, please note that we are recording to share after the event. We're going to have time at the end of the webinar, about 15 minutes, so at 2:45 ET for questions. While the webinar is going on, please feel free to put your questions in the Q&A box and vote for any questions that you would like answered. We'll try to go through the highest voted items first. So I would like to begin with introducing our facilitator, Eder. Eric founded CyberForce Q over 25 years ago and has extensive experience in account and engagement management. He provides technical and strategic advice to CyberForce Q's clients. He is a certified cybersecurity professional, and he is also a board member of the Michigan Healthcare Cybersecurity Council, MIHCC. We also have with us three amazing panelists. We have Phillip Smith from INSURICA, Rick Rosenberry from Brownrigg Insurance, and Wayne Pierce from CyberForce Q. Phillip joined INSURICA's healthcare practice in 2012 and has extensive insurance experience in property and casualty insurance for healthcare professionals and organizations. He also works with healthcare clients throughout the network and is INSURICA's top healthcare industry insurance professional. Rick is the head of Brownrigg Insurance's cyber insurance department. He specializes in working with advanced manufacturers, helping them to understand the risks they face in the supply chain and working with them to create a specialized insurance program. And Wayne is an established cybersecurity consultant with over 25 years of experience in cybersecurity. He helps implement quantifiable information security programs with guaranteed improvement, as well as successfully guides organizations through the alignment of security controls and regulatory requirements. So with that, I will pass it over to Eric to go ahead and start the panel discussion.
Thanks so much, Zareen, and good afternoon, everyone. Great to be with you here today. We'll go ahead and provide some initial questions and get the panel started. We'll also be monitoring the questions that you provide and leave ample time to make sure that we answer any questions that you have throughout today. So I wanted to just offer why cyber insurance is a topic for our coffee and collaboration and why now. And the reason for that is that cyber insurance is in a very hard market. It's a tough cyber insurance market. And at the simplest level, we're seeing a lot of supply and demand imbalance. You know, many of you in your organizations and industries have supply chain challenges. So too do we have supply chain challenges in the cyber insurance marketplace. On the demand side, we're seeing that the losses from cyber attacks have gone up. The demand for the quantity of policies has also gone up and gone up significantly. So more organizations are now in the market asking for cyber insurance coverages. We see a lot of this driven by supply chain requirements, by contractual obligations to add cyber coverages in order to provide products and services to organizations. So that's the demand side. On the supply side, loss ratios. And what that means is in the insurance sector, an organization gets $1 of premium. How much do they actually pay out in losses for that $1 of premium? And the losses have nearly doubled, the loss ratio. So that's causing the insurance companies to pause and say, how much do we want to be in this market? How much insurance do we want to provide? These two factors are driving a very difficult insurance market. That's why we're so pleased to have our experts here today to talk about the market trends, how you can get the best coverage for your organization, and then also how to best interact with your insurance company both before and after the claim. So that's the backdrop. And with that, we'll jump right in. Phillip, how have you seen the cyber insurance landscape change over the past couple of years?
Well, you hit on a lot of the great topics. First of all, thank you, Eric and Rick and Wayne and Zareen, everyone for the opportunity to speak today. It's a privilege to be with you guys, and thank you for the participants of joining us as well. You hit a lot of it already. Loss ratios. I mean, insurance companies, we like to say they're not nonprofits. I mean, they're in the business of making a profit. And whenever they're having high loss ratios, they have to recoup that cost somewhere. And unfortunately, that means higher prices and limited coverages for consumers out there right now. But honestly, what's driving a lot of this cost is just that. It's the claims issue. We're seeing much more activity going on in the world of cyber. More and more people are actually purchasing cyber. And strangely enough, the bad guys out there know that, and they know cyber insurance policies have provisions for payment. And so, and unfortunately, they seem to be targeting more just because there's more activity in the cyber world. So it's almost like this strange snowball effect. As cyber increases, so does some of the attacks on these customers. So we're going to have to get a lot smarter on how we prevent them to begin with before the insurance gets in there. So a lot of it is claims driven to begin with.
It's interesting when you see the ransomware notices and they tell you you can pay for this with your cyber insurance.
That's right.
Kind of don't put a lot of effort into it. Just send the bill uphill.
Yep.
Rick, in this more difficult market, how far in advance should organizations plan when they're approaching brokers and insurance companies to obtain coverage?
So it depends on the size of your business. Under 10 million in revenue, which is usually the industry-wide threshold, it usually doesn't take very long. There's some pretty simple controls that working with a cybersecurity company, you can get those in place in about a month. And the application process will take a couple weeks to less than a week. Once you are over the 10 million in revenue, they start to pay a lot more attention to the different controls that you have. And then as depending on whether you're in, the medical industry or in manufacturing, they may, for larger companies, to 100 million, they may be looking at whether or not you have a SOC or different things. So a security operations center. So for over 10 million, I would say it would be vested 3 months ahead of time. If you think that you are, prepared with your cyber hygiene.
Yeah, I would agree with that. We usually like to have, especially more of our larger or more middle market size accounts, love to have that conversation, at least sit down with them about 4 months before the renewal comes into place, just to sit down with them to say, hey, here's what we see in the market. Right now, unfortunately, the market looks like X, Y, and Z. We'll begin our process working with your team to begin that renewal process here in about 30 to 45 days. I love when a client gets their applications back to us within a week. Rick apparently has a much faster clients than I do because mine may take a while. So I try to track those down and we get those in. So if we can have at least 30 to 45 days before the renewal date of doing our marketing process. And hopefully if we get the markets to respond timely, sit down with the client, 2 to 3 weeks in advance of the renewal date. So the process actually begins just with an initial conversation about 4 months out, but then the real paperwork begins, especially for those larger accounts, 90 days beforehand. And it can be time consuming because some of those, unfortunately, because of the marketplace, those applications and the questions they're beginning to ask are getting much more stringent. And even sometimes those of us have been doing cyber insurance for a while, there'll be a new thing slipped into an application somewhere that makes all of us scratch our head too and go, now where'd that come from? And it can be kind of wacky. So that's usually our process for how to handle some of those bigger accounts. But smaller accounts, you're right. Sometimes there are some really quick opportunities and online application processes that you can get quotes within just a matter of a week or so if you are a small enough business.
That brings up one way that especially cyber insurance has changed. As before, it was just like any other insurance application. You're talking about how much you make, some simple exposures, but more and more we're working directly with whether or not you have an on-staff cyber professional or if you're working with a cybersecurity company, we're working with them considerably more because we have to make sure that they understand the questions that maybe an owner may not understand. And that's one thing that's changing is insurance companies are trying to figure out a way to be able to know that that company has things in place and more of a prove it model than before, with just self-attestation, just saying, yeah, we have all those things. So
Right.
there's a,
Certainly in
Oh
many
yeah,
ways.
there's been a lot of opportunities out there where they've said, oh yeah, we're planning on implementing this. And 2-3 years ago, the carrier was just like, oh, that's great. You said you're going to do it. Now they're going to like, are you doing it? And how long have you been doing it? That's really changed their application process.
And in many ways, the application process, from what I've seen, when I was running a program, we first got insurance in 2009, and 2022 is the last time. And it certainly is a test to prove how much and how well you know your organization. What third parties do you have? What liability do they provide? Where's your data? How many records? And it's almost this gauntlet at times when you get big enough to say, like, the insurance company is comfortable that you know your business, you know where the risks are, you're working toward them, even if there might be gaps. But as time goes on, those gaps have to get narrower and narrower, and you have to be able to prove that. So from a timing, I just also add that as things get more stringent, you might have to implement controls, and you probably could within a month, as Rick mentioned. Just make sure your organization is ready for that change. Because if you have to implement multi-factor and you've got a month to do it, you certainly can. Just make sure the people that have to use it are prepared for that in order to meet the deadline.
And I want to build on that comment because as we provide incident response services, sometimes it's really great to see the insurance coverages that are in place. Other times it's very challenging. And what a client had expected to be there for coverage simply isn't in the policy. So I'm curious about how we can best determine what coverage and policy should be in place and the types of liabilities that we should look to have in forms of protection when we go to the market and apply for insurance coverages.
The major ones that I've encountered, first is to look at your vendors. They're usually capped at something. The vendor may say, we will only cover twice what you pay us. So if your annual cost is 100,000, they may pay up to 200,000 if you can prove it was their fault. And that's an important piece. The other part is, are you just getting coverage for yourself, for your operations in the event of a breach? Are you getting coverage in case your vendor's policy doesn't cover it enough? Now you've given data to a data processor, they have a breach, it doesn't cover everything, but you want something that adds on. And then the third part that I typically see is, are you providing services to other people? Are you a larger organization and perhaps you're providing infrastructure services to people in the community, like the hospital I used to be at did, where we may have errors and omissions that result in somebody else having a loss. And a lot of it, for us, a lot of that was knowing the business. It was actually a non-IT discussion, going to finance and others to say, okay, where do you see the risk at? And where do you want to cover? Because here's where we're exposed. But the key part to a lot of it was your data. If you don't have the data to prove it's the vendor's fault, their insurance isn't going to volunteer to cover it. And same with errors and omissions. For us, in a couple of cases, it was a discussion of, is it worth fighting it, or do we just pay insurance because of the relationship, because we don't have the data, because the data is unclear. But those three areas are typically where I've seen the insurance for IT organizations, and certainly on the IT side. But as far as being able to claim it, it all came back to what you could prove.
Yeah,
Phillip, I remember, I think it was late last year, there were some really explicit carve-outs. For example, some of the carriers saying we will no longer pay the ransom in a ransomware policy. How else have you seen the policies change, perhaps over the last 6 to 12 months with respect to these coverage areas?
So ransomware has been the big one, just because it's so much easier for somebody, an actor, to monetize that versus other types of attacks. They can easily get money, and so that's why it's been targeted. There have been a reduction in limits for third parties, where before it was, if you have $1 million in coverage, you would have $1 million in coverage as well for contingent business interruption. So if one of your suppliers has a cyber interruption and that affects you. Usually there was $1 million before, but now we're seeing, 250,000. So some of those coverages have definitely started to lower. And then companies that are trying to stay in the market for, the companies that aren't quite as prepared, they are offering policies with giant holes in the policies. They just take, hey, this is where we're having our losses, here, here, here. So we're going to reduce those coverages down, and then we're going to still offer you terms. So you definitely want to be working and read through, or make sure your agent has read through the policy and really planned. And that's where the 4 months ahead comes in, where you look through what, as Wayne said, where do we have gaps? Are we providing cybersecurity services for others? Do we have a podcast? Because usually your media liability may be excluded on your GL policy. So if you are, saying something on a podcast or on a YouTube video that, somebody doesn't like, and they end up suing you, that may be excluded on your GL. So you want to make sure stuff like that's included as well.
Yeah, and I also think that it's important that the application, that everyone is as accurate as possible. I don't want to use the word honest, but as accurate as possible to the best of their ability. Just don't try to embellish or under embellish, just be as very accurate as possible, because they're going to go back to that application during time of a claim and say, you said you were doing X, Y, and Z for security. Now we've had a claim. Were you really doing X, Y, and Z during that time of a claim? And if you go back and say, well, we kind of weren't, well, it's a good way to get your claim denied right there. It's a very similar situation if you had property insurance and you said you had an alarm system, but you kind of really didn't ever use it and you had a theft come in. So it's a very similar deal. So whatever you're putting on your application, make sure you're doing it and doing it to the best of your ability as well.
In my case, I would usually write an addendum in a Word document. And for each of the items that I was uncomfortable or I didn't feel the yes, no, not applicable really gave me enough detail, I would add in and write a narrative. And there were a few years where the document I wrote was longer than the actual application for insurance. But there was never a question about where we stood. And that helped, because we would get writers to say, if this happens, you're not going to have coverage, but you say you're on target to fix it in 3 months, or, here's why you don't do that. And it led to good dialogues, but it took the effort up front to document that and clarify it.
Yeah. So the insurance companies are always trying to find that middle ground between how long to make an application and then what to include in it, that way, because they're sending that application out to all of their customers and nobody's going to fill it out if it's 50 pages long. But if there's areas that you think that aren't addressed, that are particular to your business, or if you think there's areas where you are doing a better job than the industry and you would like to, versus just checking a box, write in a paragraph, add some examples. That's great. Especially when you're above the 10 million. So if you're at 50 million in revenue, the underwriter is going to love to be able to look through that, and the clearer in their mind they understand where your cyber hygiene is and what you're doing, the more competitive they can price the coverage, because they're watching after their book of business. And so foggy areas, anywhere there's uncertainty, that's increased prices.
And make sure you keep your application and any supporting documentation, one, so you have a record of what you said. But I find it useful to publicize that internally. So then your IT people, your management, the people that have some stake in ensuring that you continue to do what you committed to, or that you keep doing what you said you did, they know what you put on paper. Because you don't want to be the only person in IT or the organization that really understands what you promised the insurance company was being done. It needs to be institutionalized.
Now, it seems that these coverages, and when we apply for differential coverages, they could be by choice or even by circumstance. So as part of risk management, perhaps going to the market and saying, I'm choosing more retention of risk, or there simply isn't coverage available. So whether it's by choice or circumstance, what are some of the other ways that organizations are providing, I'll call it non-insured methods of coverage?
One of the ways that you can work on that is just to have a really good plan and make sure it is institutionalized in your whole organization. You're doing practices, you're sending out, fake phishing emails. And when something does happen, your people know, when to call the forensics specialist, or, how to stop things as soon as possible, because a lot of that, and there should be stuff that your insurance company is providing. They'll provide you tools to be able to work with as well. But that really is the best method, is that prevention. And there's a lot in the human error side that you can definitely make a huge difference in your overall risk.
Yeah, I think on having a game plan is absolutely essential. Like, what do we do in the time of a claim? And some of the things you can pre-plan very well. Like, there are some carriers that are turnkey, that you buy a policy and they have some forensic companies, they have some companies with them that are tied into it. But sometimes your larger organizations, they prefer to have those relationships already established, like a PR firm. You can work in advance with local organizations that understand your organization, to know how to handle the PR side of it, how to handle notification side of it. There's very time and requirements for those. Are all things beforehand you can do. I specifically work mostly with healthcare and hospitals, and I didn't even quite realize this. I listened to a podcast recently from the American Hospital Association. They were talking about a cyber claim that occurred at a healthcare institution up in the New England states. And one of the things that they were challenged, being down for an entire week, is the young doctors did not know how to do a paper chart. Like, they did not know how to actually chart on paper an actual patient encounter, which someone of my age is kind of crazy to think about that. But thinking about that, my doctor is younger than me now, I can see that can be real. And so those really kind of grassroots things to prep your team on what do we do tomorrow if tomorrow we couldn't turn on the computer and we were down for a couple of weeks or days or whatever it might be. Just those kind of troubleshoot. We do that for disasters already. I mean, I know organizations plan for everything from active shooters to tornadoes to fire, but having the same kind of philosophy about, okay, guys, tomorrow you can't use your computer. How do we see a patient? That's a very scary thought for a lot of folks that have spent their entire lives nothing but on a computer. So,
And it ties into your incident response as well as your crisis communication. The hospital I was at, we required people to do monthly tests. First time they did a test, they pulled out a crate, one of those plastic thick crates, and had forms that were printed 3 company names ago. And it's like, well, you haven't touched them. I'm like, yeah, but they still work. And but it's going, and it's having the rigor to do that, because like anything else, when you need it for the insurance, you're dealing with an incident, that's not the time when you want to figure out the details.
Right.
Some of the details could be things like figuring out what the rate is. You took a blended rate to say the average rate of the people who are likely to be involved in an incident is X. So if we file any claim for staff time, that's what we're going to use. So then we're not down counting the minutes for each individual person. And so you don't have to get to super level of detail for it, but you do want to have some logic and some structure in place ahead of time.
Tell me more about that, because it seems like perhaps when we're doing incident response, we're engaged in disaster recovery planning, that the insurance policy can be much more integral in that, and even planning for what would be covered and what we would just provide directly as our organization as part of the response.
Yeah. So part of it starts with the tiering. And when it's a large item or a big item, one of the steps should be contacting your broker. contacting the insurance company to say, hey, this thing happened. Might be nothing. Want to let you know what our plan is. In my experience, the insurance companies will then offer, ours was included in part of the policy, so there's no charge. They would let us talk to a lawyer, let us talk to others to say, hey, we had somebody do something similar and here's problems they ran into legally or business perspective or because of their policy. So then we would come up with a different path or different options. Or they say, nope, that's great. We're here if you need us. And then as we would go through, we would give them updates. Internally, the requirements for reporting and making a claim helped drive what data we tracked. IT people are great at fixing things. They typically are very bad at remembering what they did to fix things. And so you get in, you just start trying things. Hey, it worked. Everybody hands off. Don't touch it. But when you then have to document and you have to make the claim, it can be hard to remember who fixed what, when, what was the timeline, like a CSI event, you know, it's just timeline of events, who did what. But having some of that figured out ahead of time, engaging insurance at the beginning does help facilitate that process.
Mm-hmm. Wayne brought up a really good point about reporting a claim. And this is something that is sometimes not really deeply understood. And that is who knows about a particular incident when it occurs, because there are timeliness in reporting claims to a carrier that can impact. So you're going to look on your policy because it'll define who is the who has information that should report a claim, and it could be very broad. It could be like any employee. Well, I mean, if that's the night shift IT person that saw something that didn't report it for a couple of days, that might impact whether or not you have an actual claim response, a notification issue. So being very aware of what that particular policy says about timely reporting and who is to report and who has knowledge of a claim can be very, very impactful on whether or not a policy actually responds correctly.
In many ways, it's like a code blue team for a hospital. When in doubt, sound the alarm.
Yep.
And then
Agreed.
after that incident, they will come back and say, okay, in this case, you probably didn't need to because of X. And then you can learn from that. And Rick wants to say something.
So with a lot of companies now, because the claim situation in cyber is so much different than if you rear-ended somebody, you know, in a vehicle, because hey, that accident happened. But in cyber, a lot of companies will allow you to just put them on notice. So there's something that happens, whether you lost a laptop or or there was an anonymous person signing on to one of your networks. So you can just put them on notice, say, hey, you know, this happened at this time. And you want to do that with anything that you think could potentially turn into a claim situation, because then you have it established. And that's similar to what you would do with workers' comp. So you have, okay, I put them on notice, and oh, hey, they found the laptop. It was, you know, wherever, or hey, we found the person, and there was an anonymous login, or somebody was using their wife's laptop from home to log in, you know, because theirs broke or ran out of battery. Or, you know, we put them on notice, and now we realized, hey, we did end up getting hacked, and somebody you know, has been around in our system, and they may have certain data, and now that company knows that they can escalate that, and you're working with them. So that's definitely what most companies are adopting, that model. And as far as the resources, there's more than one reason to have an insurance policy. So a lot of companies will allow you to speak with, you know, a PR lawyer or a forensic, you know, company, and there's lots of options without, you know, having a claim and without having, you know, a strike against you, was what people see with traditional insurance.
And if people are more resistant to issues, I found it helpful that when they know it's been reported to insurance, it takes out a whole different context, because the insurance are the scary lawyer people. You know, there's things you have to do, and not that you want to abuse that, But certainly when people know that you report things, and tend to get more cooperation, more coordination with just getting it fixed, getting it monitored and reporting it out.
I sense that in the cyber insurance sector in particular, certainly could be broader than cyber insurance, that there's something in between that really hasn't been well addressed yet. And maybe it's because cyber insurance is relatively new and relative to other coverages. But it seems we're right to the claim side. So let's say we get the policy, but we've not yet made a claim. What opportunities are there for a good relationship with the cyber insurance company and loss prevention as opposed to making claims?
That's a great question, Eric. Most insurance carriers that specialize in cyber insurance is a very unique policy, unlike most insurance policies. A lot of these companies, I would beg to say most of the companies at this point do have some robust risk quality, like risk control or trainings or webinars, tools that you can use, consultants that they have embedded with the policy, that it comes just as being a policy holder, you can access it. Typically, if you have a cyber policy, if you go those last 4 or 5 pages, there may be several pages about call this number for this. There's a lot of information back in the back of that policy about who you can access. Also, you really need to tap into your broker because they should know those things as well. And some brokers themselves have their own specialists too that can work with a client. So all this stuff comes with it. It's the one policy. You just don't buy it and put it on a shelf and hope to never use it. You buy it and you use it. Hopefully not for a claim. You use it to really prepare yourself to be better so you never have to have a claim. But there are very robust policies out there that do come with a lot of bells and whistles for them. It is the one policy that you do pay for what you get, just so you know. So I know everyone likes to find the least expensive insurance out there. Trust me, I get it. That's what I do for a living. I have clients, I get it, but it's the one policy though that you need to be careful. There is a difference between policy A and policy B in the pricing, and you really got to dig deep and find that out. So
yeah, so when it comes to renewals and having a great relationship with the insurance company, it's not just about telling a good story anymore and saying, hey, we have this and this. Especially when you get into larger policies, it's about how you are proactively adapting and moving forward. So with a large company, you want to say, hey, these are the attacks or the things that we've seen. So this year, here is our response times to these different things. And here's how we're adapting to, become better protected in the future. And so I know, ongoing with businesses, there's things that you run into and then you adapt, you overcome. And if you can put that into the renewal, and so then that the insurance company, the underwriter knows that, hey, they are active in their hygiene and above just being compliant with, MFA and those certain things, they're proactively looking after the company. So I feel comfortable offering them a renewal that is, if you get a renewal that's the same price, that's considered a win. A lot of times in this market, and keeping hold of the terms as far as the coverages. So as things continue to tighten, you may have these terms one year, and then the next year, if you don't prove that you're working hard to take care of their interests, then they may, limit certain coverages.
And certainly before your insurance comes up for renewal, ask, are there what's going to change? What do you anticipate changing? Is there anything I can do to improve that? Perhaps it's tightening up your data retention, or it's having more controls around remote access. What are those levers that you can start to adjust before you get to the point where the price goes up because you have too much data insecurely stored, or you've got archives that you don't need to keep. I've also found it's good to, besides looking at your policy, find out if you're going to buy something, ask your insurance company if it's something that they have any kind of pre-negotiated price or deal for. Sometimes there's something out there that is not incident response related, but might fall under an agreement they have. So then if you, maybe you want the same vendor, maybe you don't, but at least it's somebody that you could look to see if there's a reduced price or have that conversation with them. And again, and a lot of it does start with the detail you provide on your application or your renewal. The more they know about the situation you're in, the more they can help you, whether it's navigate the right policy, navigate any writers and how to handle those as you go along.
I mean,
in
I'd
the
like to
middle of
build
the
on
next-
that point.
Okay.
So there was some talk about, providing information and accurate information on the application, but then that there may be loss prevention activities that take place over the course of the year as organizations improve their cybersecurity programs. What's the best way to communicate the status of those changes in addition to the application?
The way that a lot of companies having a roadmap, established, saying this is where we're going, this is where we're at, and then showing the changes to that roadmap because of the changes in the environment. This was our roadmap last year. We talked with you about it. Changes here and here happened because we ended up seeing attacks of this type, or killware became something that we're worried about now. And so now our roadmap looks like this. And so having those visual couple page tools to be able to show an underwriter definitely helps.
And building on that, one way to think about it, that I thought about it, is in many ways, treat your cybersecurity people like another threat intelligence feed. You've got FBI, CISA, and others that tell you the trends. Meet with them periodically, quarterly, to say, okay, what are you seeing? What should I be prepared for? What are people making claims on? And does that line up with what you're seeing elsewhere? Because one, that's what they're going to adjust for, but it might be another source of intelligence on the types of attacks to expect.
One of the other things that really stands out to me as unique about cyber insurance is the frequency of the types of attacks. So certainly not uncommon for organizations to experience millions of cyber attack attempts each year, and to have small incidents in the hundreds, if not thousands, not necessarily something they would file an insurance claim for. How much visibility and awareness does it make sense, and how soon should an organization provide information to their carrier about these micro events?
To me, it goes back to the, go ahead, Phillip.
Oh, I was just going to say, maybe it's because it's my nature of my job as being a broker and I'm risk adverse, but I err on the side of caution that it's better to be in good communication with your cyber carrier on these instances. I don't think there's any, they do not punish you, and unlike contrary to popular belief or urban legend that they're going to come back and get you if you keep reporting information. They want to work with you, and it's a good way to have an open dialogue. So I firmly believe that when in doubt, have a conversation with the carrier. Their claims professionals see this stuff every single day, just like you guys do at CyberForce on a consistent basis. They're going to know really quickly, is this for real or not? Should we go ahead and move it to the level of a claim, or just notice, or even just like, hey, thanks for calling, but no big deal. So I live with the philosophy that over-reporting is better.
I certainly agree with the statement of when in doubt, report it. I was just thinking that within your incident response plan, there's typically going to be tiering. The bulk of your stuff is going to be at the lowest tier. There's a ticket opened, somebody can't log in. Like those kinds of things in the low tier, don't report. But if it gets into medium high because you're investigating, you discovered it or something else, or you had an outage and now it's up to an hour, make them aware of it.
Yeah, so the way I usually have people look at it is, if there's, in the situation, if you could see whatever you're doing escalate into a claim at some point, so if it's in that realm, then you want to put the insurance company on notice, because you need to get that established as soon as possible. And if it's something where there could be a loss, then in order to have coverage and in order to get in front of it with with the resources that maybe the insurance company provides to make sure that there's not a loss.
And adding to that thought of, if it's something you need or you believe you will need to report to any other organization, if it's something that goes to the Office of Civil Rights, goes to the Federal Trade Commission, call your insurance company. Call your other lawyer too, but make sure the insurance company knows.
There was a question in the chat asking about HIPAA breaches and fines. And does the cyber insurance pay for those fines? And yes, in your first party and your third party coverages, you should definitely make sure that you have coverage for those fines. So third party, if someone else has your information and there's a breach, you're still going to be liable to your customers because you are, and you maybe you're an additional insured on their policy, but you have that customer's information and you gave it to your other companies that you're working with. And so make sure that you have that coverage, first party and third party. And then you can also look at coverages for whether you're working with the Department of Defense, or if you're doing, mergers where there's penalties for certain things. You can definitely look and talk with, insurance agent about, hey, how can I cover these penalties? So, traditionally penalties like that are non-cyber are covered under different policies. And so if you have those contracts, you definitely want to make sure that they're insured, or you have the money to pay those fines.
Thank you for answering that question, Rick. I was actually gonna see, Eric, are you okay for us to move to the Q&A section? Because it looks like we have quite a
Absolutely.
few.
I love that this Coffee and Collab group is always engaged and active, and like to see all the questions we have in the Q&A box. So please, Zarina, I want to make sure we can address as many as possible.
Absolutely. So everyone, please continue to put your questions in. Some of these I feel have been answered, so I'll start with the ones that could use some more expansion on. Sam had asked, when will the new federal government cyber incident reporting affect organizations? I understand that there's a 72-hour reporting requirement for CISA.
So is the question, when will it go live? Like obviously once the rule goes in effect, it applies, and you would report within 72 hours, just like healthcare would report to OCR within a certain length of time. A big part of that is, again, going to be your incident response to know what incidents need to be reported and that they're handled correctly.
Okay, great. Sam, if you want further to explain your question, please let me know and I can take you off mute and we can get that answered as well. We'll take that for now. Rick, did you have something to say?
Yeah, so we didn't address the amount of fines that we're seeing for the HIPAA violations. I don't have the data, but I wonder if Phillip, if you had an idea of what you're seeing in the medical field.
I don't have the latest data on it right now either, but one thing I do want to caution about that is the timeliness of reporting, because there are fines and penalties that can occur, and depending on the actual carrier, whether or not if you fail to report or notify timely and you get hit with a large federal penalty, that might not be covered by the particular carrier. So like I said, every carrier is very unique and specific. So back to those reporting requirements, so you need to be very careful on reporting those.
And then, HIPAA reporting, but federal government is trying to expand, and a lot of organizations have expanded what is personal identifiable information.
Mm-hmm.
So that is getting more and more broad because there's more and more ways to use fewer pieces of information against somebody. So when you're looking at information that you have, check if a person's name is connected to pretty much anything else about them, whether there's their address or their contact information or anything that is especially like a driver's license number or something like that that's a little more restricted, like a birth date, that is considered personal identifiable information. And so you want to make sure that you know what reporting requirements you have on that information.
I think their metaverse avatar is still safe,
For now.
but stay
now.
tuned until next
It
year.
is for now. At least it is for now.
That's right.
Great. The next question we have is from Alex. It's a little long, so I'll read it to you. First, he said, great topic today. It is my understanding that ransomware related incidents now account for roughly 75% of cyber liability claims. Assuming this is accurate, will the cyber liability industry continue to scale alongside ransomware payment demand, or should organizations plan for some changes in approach? Also, he's interested if cyber liability insurance does or should have any role in instances of hacktivism where ransomware demands aren't purely monetary. For example, the attack on Belarusian Railway from earlier this year.
So as far as the non-monetary demands, the insurance company can pay, will in most instances pay for somebody that is going to negotiate, those demands. So you have protection there, as well as in the background, you're going to have the forensics experts that are doing their best to try to figure out who this is and if we can get that data back without, meeting those demands. Ransomware, like I said, is the easiest monetized. And so that has been the trend recently and that's why the large part of the losses are from ransomware, because that's where the people are, the bad actors are going. That may change, but we're seeing a lot of companies reduce ransomware coverage. And I think that's a big part of, you're seeing higher losses and they have to run it like a business. And so if they can't afford to offer those coverages, then they're not going to be able to offer those coverages. I've seen in 2022, there are some new companies to cyber. There's some new approaches, and you still can get ransomware coverage if you have the right controls in place.
The thing about ransomware to keep in mind is it's typically the final step of an attack, because they've already gotten into your network, they've moved laterally, they've gotten code running, and now they're going to tell the world that they're there and start locking you out of computers. And so what the insurance companies really want to do is see that you have the controls in place ahead of time so it doesn't get to the point of ransomware, rather than just giving you protection at the tail end.
In most of those situations, that person or organization has been rooting around in your system for a month and getting all the dominoes lined up. And you have to prove to the insurance company that you can catch those dominoes, before they knock them over and they shut you out of your system.
Great. So we'll go to the next question. Phillip said, this is a great topic. From someone who has never made a claim, would you be able to give a few examples of what would make something a claim situation and maybe cover some of the benefits of opening a claim?
Well, we've hit on probably the most common one, which is ransomware. You come in one morning and your computer's locked out and you can't get into your business. That's probably right, unfortunately. And whether it's 70% or 60% or 80%, the number is pretty high. That's the pretty most common at this point issue. And so I can tell you right now, most of the clients I've had that have had any kind of cyber related claim, I think nearly every one of them was a ransomware conversation.
We've had some in the past, not CyberForce, but I've been involved in some in the past that were for misdirected faxes. We were faxing information to what we thought was a doctor's office. Doctor had moved, it was now somebody's home office, and they were really unhappy that the phone was buzzing well into the early morning. Some things like that because of the data involved, because you don't know if you're going to get sued, you don't know if it's negligence. It was that when in doubt, let them know.
Yep.
I've also had a bunch of them where it just got really messy and we weren't sure if we were going to have a big outage internally. And so we let insurance know that, hey, this might require us turning off our data center, some key pieces of it. And that could take us down for 30, 45 minutes. Again, just gave them the heads up.
We
Awesome.
I've also seen, speaking of that, the random email that supposedly came from your CEO or CFO. instructing folks to do X, Y, and Z. Those are unfortunately pretty common, like, hey, we need this money, or even get a bill from a supposed vendor that you may even be expecting a bill from a certain vendor. And they're watching, they know that you're doing transactions, and they can clone your email and say, hey, go ahead, and they put a false banking link in there, and you end up moving the money to the wrong account. Those are pretty common too.
So I saw Ken's reply. Can I take that one? So you might want to do that. I would still, so his reply was, why would I not restore from my backups and utilize the tools I have in place already? It's more what he's looking for. And you might want to do that. But the moment you become aware of the ransomware issue, you would want to let the insurance know. Because one policy things, if you might make a claim in the future and you don't know at this point whether you will, but your backups might not have all the data. They might be issues restoring them. You might want to claim the time that you spend restoring your backups, testing it, and reconciling. And so you'll need to make sure insurance knows, so the staff time that you put in, any extra hardware that you might need, any of those kinds of hard or soft costs, if you want to claim them, you have to let insurance know as soon as you find out about the possible event. But if you can restore it from backup instead of paying, I'm sure the insurance company would love to hear that.
Yep.
What generally constitutes notification versus actually filing a claim? Because I'm sensing that might be a nuance that's important here.
So that so the different insurance companies are going to have their own protocol, and as you're going through and getting the policy in place, they're definitely going to make you aware of that protocol. So there may be different numbers that you call, or there may be a different, like you email this to put us on notice, and you'll get a response within a amount of time. And so they're definitely going to have different contacts for you. And as you're getting that policy in place, you're going to want to incorporate that as well as their resources into your response plan.
Yeah, the notification versus claim was a great question. So think of a claim basically means you have had a actual loss, and you are asking the insurance company to indemnify you of that loss. A notification is the potential for a loss. There might be a loss that comes down the road, but there's not currently. Professional, say for example, medical liability insurance is a great analogy of this. We have a patient that is angry because of X, Y, and Z, and they say, I'm going to go sue you because you whatever. You haven't been sued yet. There is a potential of a lawsuit, so you notify the carrier that there could potentially be a lawsuit, and then you wait and cross your fingers that you don't get served a notice. But the moment you're served a notice, now you have an actual claim. And so that's the actual difference between notification and claim, and works very similar in also cyber.
Thanks for that clarification, Phillip. Helpful.
Awesome. So we had another question from Justin. You have answered what are the most common cybersecurity claims, which are ransomware based, and are they also the hardest to work through?
I think personally, the hardest to work through are third party, because you have to trust that other party is doing what they need to. And I've had cases where it drug on for months before they would ever really give us anything viable. We had to actually engage third-party lawyers to threaten their firm, their third-party lawyers, before they finally gave us some useful information. But you basically are at their mercy on their schedule. So I find those the hardest to work through.
That ties in very well with another question from Sam. He asked, there is increasing attacks related to disruption and IP exfiltration in addition to ransomware from criminals. Do typical policies cover data exfiltration and disruption and associated third-party liability?
Well, not to be humorous, but I give the typical insurance question answer. It depends. So that's always our out in the insurance world. It depends, because it does depend upon your policy, because you do have what's called first party coverages, which first party basically means a claim for you, it's something that's happened to you. A third party is, which in this case sounds like this claim scenario, means that something that your organization is a privy to that damaged a third party, whether that's a customer or a vendor or anyone other than you is basically the third party. And so it just depends on the policy. But yes, there are coverages available that could be first or third party.
And that's where it becomes important to tier your vendors. Like, who are those really critical vendors because of the function they provide or the data that they have access to? And then know what they cover in their policies to then determine, do you want to get third-party coverage, like just like driver's insurance, where if I get hit by somebody that doesn't have enough insurance to cover the damage they do, my policy is going to help.
Mm-hmm. Right.
Great. Well, I think we have time for one last question. So Keith had asked, how has the insurance companies adjusted their level of involvement during a breach? Is there a requirement for the client to utilize the insurance company's resources for remediation of said breach?
Well, back to the insurance question. It depends again. It depends on your policy you've written and which carrier. If you are a larger, more sophisticated organization and you have a pretty good program in place and you've pre-negotiated your own vendors, your own forensics, your own, all these other things that sometimes very large organizations do, carriers are pretty comfortable with you using your own partners in those situations. But the truth of the matter is the carriers have pretty good relationships already with unbelievable vendors. And they do prefer to use theirs in most situations because they really know what they're doing and do it on a daily basis. So it depends on your policy, depends on what you pre-negotiated with your carrier, depends on how robust and sophisticated your organization is with cybersecurity and that relationship between you and the carrier.
But to pre-clarify, I suppose, I've never seen a carrier step in and take over. So they have relationships with forensics companies, with other places, but they're not going to come in like stormtroopers and say, okay, we've got this. They just want to make sure that whoever you're using, it's not a high school kid who's doing it part-time that doesn't know what they're doing necessarily. It's somebody who does it professionally, that understands what's needed and will do a thorough job. If you've got that, they're not going to push theirs on you normally. Well, I haven't seen that.
Wonderful. Well, we're just about up on time here. I want to thank our panelists and Eric for facilitating. This was a wonderful conversation, and I will have the recording sent out to anyone who is on the call or who registered for this event. So thank you again very much, and hopefully we'll do another one of these soon.
Excellent.
Thank you all.
Thank you, everyone.
All right.
Thanks. Bye.
Bye-bye.